Welcome back. Let's get straight into this market picture then. So it certainly has been a down day out in Europe, unfortunately, but the green did come through out in the Asian trading picture following that negativity that we saw out on Monday then, around 0.1% higher for the Hang Seng, with the Shanghai Composite and the Nikkei being one of the bigger gainers on that front. But in Europe, though, big falls then for the CAC 40 out in France, unfortunately, not enjoying some good numbers there. More than 1% loss for the DAX, with the FTSE 100 in London around 0.33% weaker. This has not translated into negativity though on the local index. Following last week's weakness, we're hoping to see perhaps a comeback to the market ever so slightly, around 0.5% better off for the all-share index. The financial counters seem to be the biggest gainers today though. This is despite the news coming out from Capitec yesterday, who said that their earnings picture may be even worse for following a set of course, COVID-19 impacting things a lot. They've lost at least 400 million rand alone just between March, April and May as well. So that certainly has helped or not helped the business. Then the banking counters going up 4.2% despite all that news. Then Capitec does see themselves losing 83% of their earnings picture at present. So they will be the second worst bank in terms of losers on their earnings board. The weaknesses though do come from the resource counters that went down 0.2%, of course led primarily by platinum and gold counters, as they have shed quite a bit. Platinum down, platinum shares that is down 2.9%, 1.24% down for gold mining companies there. Over to the companies themselves that have certainly suffered quite dramatically. Woolies has seemingly gone up 4.5% today, so enjoying some numbers there, perhaps feeding off the retail story that comes from ShopRite then, as they saw their earnings pick up quite prodigiously then, and record sales in fact. We'll unpack all of that in just a bit. The pandemic clearly doing some good for ShopRite and its earnings, even gaining market share. But in terms of negativity, the retail counters have always struggled during this time. So Liberty 2 Degrees goes down 4.33%, or rather 5% should I say. Altron, as well as Sibanye Stillwater and Impala Platinum, forming a part then of those platinum counters, which have gone down nearly 3% today. Onto the commodities board, weakness again for Brent crude. Demand issues still at play on this front, so weakening then back to nearly $40 a barrel there. It's down 3.25%, so big fall on that front. Platinum counters more than 1% weaker. The demand picture still unfortunately affecting things on that front. Let's remember then that the gold figure had hit $2,000 a fine ounce. Whether it will be able to settle at that figure again seems like a long, hard slog, considering that it's fallen 0.5% today and now sits at $1,918 a fine ounce. Weakness then for the local currency as well, as it looks to head back towards that 17 rand against the US dollar figure. Of course, the GDP number certainly playing its role in affecting just how investors begin to see South Africa. Whether we'll be able to pick ourselves out of this mire is the big question then. And of course, as you can tell, if investors run away with it, it certainly doesn't look that way. We're at 20 rand for a euro, 22 rand 10 cents then for a British pound. Chantel Marks from FNB Wealth and Investment just join us via video link then as we unpack this market picture. Chantel, that rand getting an absolute hammering, the GDP figure unsurprising.
Yeah, I mean, the GDP figure was very weak, and it was actually slightly weaker than expected. But that very big drop in terms of the headline reading does present a much worse picture than what's actually happened. So if you look at minus 51% quarter-on-quarter, seasonally adjusted, annualized, it means what GDP would have dropped by if it continued at the run rate that it dropped by in the second quarter. On a year-on-year basis, so taking away the annualized bit, GDP fell by 17%, which is exceptionally weak, but it is the worst quarter. So things are set to improve from here on out.
Yeah, it does look difficult to see where the improvements come from. And yes, it's an extremely low base, but things have certainly been hard. We have still been in lockdown, of course, post-June, that is. And even though those lockdown restrictions were eased quite massively, we find ourselves at stage 2, or level 2, should I say, now in the month of August. There's still quite a few businesses that are struggling to survive, even some that have closed completely, meaning their job losses are bound to rack up.
Yes, and I mean, you just had a Freudian slip over there, stage 2. We have load shedding, which is a massive constraint to growth as well as to the recovery. So even though I'm saying we expect an improvement in the third quarter, that would be on a quarter-on-quarter basis. But year-on-year, I think we're still going to struggle in the third quarter and probably in the fourth quarter as well. And for the year as a whole, we expect GDP to decline by about 9%. So let's say between 8 and 10%. Midpoint of that would be 9%. That means that our economy will be 10% smaller than it was at the end of last year. And this follows on as well from, I think, 4 or 5 years of sideways movement in terms of growth. After this year, after next year, actually, where we expect a slight improvement in growth, we're still going to be at 2013 levels when it comes to the size of our economy. This is exceptionally challenging because population has continued to grow. So we're going to have a big problem in terms of creating jobs for people going forward if we don't do something to reignite growth in this economy.
It's going to be an absolute hammering. Sure, you bring up some good points there with regards to at the end of next year, we'll still only be at 2013 levels. That's absolutely scary. Let's try to move to some company news now. Yes, we've got the bad news of South Africa's economy, but the pandemic seemed to play very well for Shoprite. Record sales numbers, of course, a dividend being put out there, gaining market share. Talk about a pandemic resilient or pandemic proof company.
Yes, I think the sector generally is a little bit more pandemic proof than some of the other sectors in the South African economy. I'm thinking specifically about manufacturing and construction. And food retailing certainly, I think, would have been more resilient because they remained open for most of the lockdown. They were limited, though, in terms of what they were able to sell, and you could see that come through in Shoprite's liquor sales numbers as well as their furniture numbers. But demand for essential goods were very strong, and it seems as if people chose to buy those essential goods from Shoprite instead of perhaps some of the other retailers. Now, Shoprite, of course, also includes Checkers, which I think has benefited greatly from the partnership with FNB eBucks, and also USave that saw exceptional growth come through during this period.
They also have that online 60/60, I think it is, of course, which is the online shopping tool. They've had around 620,000 downloads of the app just to get people actually shopping back into Shoprite or Checkers as well. So it certainly does mark a big improvement. For the future, though, does it stand them in good stead?
Yes, I think the fact that they've actually had the opportunity to expand their online footprint through 60/60 during this time will probably result in them kind of remaining the first mover when it comes to a proper online grocery delivery system. So I think something like that will support them. I also think that the perception that Shoprite has lower price points will help them if the economy remains under pressure, which we do expect for quite some time. So you might see continued down trading, even though it's not actually always the exact story on the ground, but you might see a continued shift by consumers to Shoprite's brands.
Yeah, we do get to chat to the CEO. My colleague Nzinga Qunta does chat to Peter Engelbrecht, the CEO of Shoprite, at the top of the hour, 2 p.m. So do stay tuned for that. But Chantel, thank you so much for the time. Appreciate it this afternoon. Great chatting to you as well. And we'll hopefully catch up soon enough then. That is the market picture. Positivity on the local bourse, but only just. Shoprite enjoying some good numbers. Aspen selling out on one of their plants as well then. That is their thrombosis drug unit out in Milan as well. So that is quite interesting, and we could have even chatted all about that. But